Well, ladies and gentlemen, it looks like we're going to have two of the biggest IPOs we've had in quite a while in the stock market coming in 2019. Uber and Lyft look like they're both supposed to go public in 2019. So what I wanted to do here today is go through both of these companies. I want to look at the financials that have either been leaked out of these companies or the financials that they have voluntarily given out there. Now, there are no prospectuses yet on these companies. So there's actually, when they actually get further into the process, they actually release what's called a prospectus, and that gives all the financial data about all these companies, both these companies. We don't have that information yet, so we're going to go off of what we think they're going to be valued at, and also the financials that they've either given or have been leaked out there. So that's what we're talking about today. If either of these companies are going to be worth buying on the IPO and whatnot, kind of sharing my thoughts about both these companies, their business models, and kind of where they're going, competitive threats coming in their space, and all that type of stuff, guys. So hope you enjoyed this. I did a poll on my Instagram. Almost 9 out of 10 of you guys wanted me to do a video on this, so I thought it would definitely be worth doing. So with that being said, let's go ahead and get right into this, guys. So just 2 days ago, this information came out of the Wall Street Journal, reported Lyft set stage for early 2019 IPO. Ride-hailing firm likely remains a step ahead of its rival Uber in coming to the public markets. Lyft has filed confidential paperwork for, very confidential, right? Lyft has filed confidential paperwork for an initial public offering, a key step that keeps the ride-hailing firm on pace to hit the public market early next year. Now, by the way, if you're a little confused on what it means to become a public company, basically what that means is it means that like regular investors like you and I could actually buy stock into these companies when they actually go public. So right now, if you want to invest in Uber or Lyft, you better know somebody way high up at one of those companies and somehow have a network in or run a venture capital fund or something. It's very unrealistic to actually invest your money into Uber or Lyft right now. However, once they become public, like any Joe out there can go ahead and invest in these companies, all right? So Lyft's planned IPO is one of the most anticipated Silicon Valley debuts in recent years. A filing which was expected would suggest Lyft remains a step ahead of Uber Technologies as both work toward IPOs in 2019. Lyft is aiming to debut in March or maybe April, according to people familiar with the matter. By filing with the SEC now, the company should have enough time to answer questions from the agency and keep it on its schedule, all right? Now, in October, the Wall Street Journal reported that Lyft had picked up underwriters for its offering. The firm's valuation is expected to top the $15.1 billion it was valued at earlier this year. They're talking about maybe up to maybe $20 billion or somewhere in there is where Lyft could actually be valued at. Now, if we look here, we have some numbers here around Lyft's growth, all right? So in the first half of 2017, Lyft's revenue came in at around $412 million, which is very impressive. But if we look at this past year, the first half of 2018, we're looking at around $909 million revenue, okay? That's about 120% growth year over year. That's absolutely massive. However, on the downside, if we look at this, the loss has gotten much bigger also, okay? So the first half of 2017, they lost around $255 million supposedly. And in the first half of 2018, it looks like they've lost around $373 million. So actually a much bigger loss. However, on the good side, one, the revenues are still growing massively. Two, the loss as far as a percent of the margin is less, okay? So if we look at the first half of 2017, they had a negative nearly 62% net margin, okay? Whereas in the first half of 2018, now it's down to a negative 41%. So which means things are moving in the right direction. However, it's still taking a massive loss. Like Lyft is still losing a ton of money and they're losing more money than ever. It's just the percent of their revenue they're actually losing to losses is becoming less and less, which is definitely a good sign if you're judging a company on that you are thinking about actually investing in, all right? Now, the most impressive thing I would say for Lyft is if you go back 2 years ago, you look at its first half 2016 revenue versus this year's first half 2018 revenue, we're talking about a 6x, all right? A 6x in the 2-year span. That's amazing. So they did a 2x plus, year over year from 17 to 18. But the 6x on a 2-year basis is absolutely amazing. Amazing growth there. So Lyft is absolutely a growth beast, no doubt about it, all right? Now, if we look at it in regards to its market share, so supposedly it used to have about 15% market share, but then it went up to nearly 30% now between the September 2016 and the end of 2017. That's when it exploded. But now supposedly Lyft's market share has plateaued around that 30% number. So it had a huge growth in market share, but now it's just kind of leveled off and plateaued around that 30% type number. I think a big part of that was honestly in February 2017, video went viral all over the internet on Uber's CEO arguing with one of the Uber drivers. I think that was a big negative out there. I think honestly that was one of the biggest blunders we've seen from any company, at least in the private markets, for a long time. It represented Uber in a very negative light. It went completely viral on the internet, and a lot of people were siding with the driver rather than the CEO of Uber. The CEO of Uber in that situation came off as just kind of like whenever you have so much money like a guy like that has, you're almost expected to be the bigger person in a situation like that. And the driver was saying, "I lost money because of you," and this and that. And the Uber CEO attacked back, and a lot of people just saw that as, it reflected negatively on Uber's brand. So needless to say, the CEO, who was a founder of the company, is now out of the company. He decided to step down and let a new gentleman, Dara, go ahead and replace him. And since then, Uber's been running very good. But I think that is a big part of why Lyft stole so much market share, with just that whole negativity around Uber at that particular time. And it just correlates. Like you look at what happened at that time, and then look at the market share that Lyft was able to get over those coming months. It was pretty amazing how much a negative publicity thing can go out there and actually hurt the business overall. All right. Now, just here within the last 24 hours, we have Uber that is basically confidentially filed for its IPO as well. The news just came out. Now they're talking about Uber could be valued at nearly $120 billion. That is a massive difference. So Uber's IPO could be valued somewhere around $120 billion, which is well above the $72 billion estimate from its last round of funding. Okay, so if we just look at the numbers, like obviously Lyft coming in maybe somewhere around a $20 billion valuation, somewhere maybe even a little under that. And we have Uber coming at $120 billion. Obviously, these companies are valued very differently, okay? Now, while Uber isn't required to disclose its financial results, Uber has done so for the past few quarters as it gears up to go public next year. In Q2 2018, Uber's net revenue was up 8% quarter over quarter at $2.7 billion. Year over year, that's a 51% increase. So the Uber is still growing very rapidly at 51%, okay? Uber recorded gross bookings, the total taken for all of Uber's transportation services, of $12 billion, a 6% quarter over quarter increase and a 41% year over year increase. But while Uber's gross bookings increased, so did its losses, just like Lyft. In Q2, Uber had adjusted EBITDA losses of $404 million compared to $304 million in losses in Q1. Uber's losses added up, given its investment in Uber Eats, also the India market and the Middle East market, and as well as the bikes and scooters business. They've really been expanding around the United States to try to get more into that business. This quarter, Uber expanded Eats into a number of new cities in Europe, the Middle East, and Africa, and they acquired food delivery startup Ando, announced the expansion of Jump Bikes into Europe, and made its scooter ambitions official. Other key stats for Uber's Q2 2018 adjusted EBITDA margin was 3.4% of gross bookings. In Q2 2017, that was 6.3%. And gross cash is around $7.3 billion. And that's the main reason they have all that cash, is because they've raised so much money from VCs over time. It's not because the business was making money or something. Like, they're still taking big losses there, all right? As far as what the CEO had to say, we said we had another great quarter, contributing to growth at an impressive rate of business at our scale. Going forward, we deliberately are investing in the future of our platform. Big bets like Uber Eats, congestion and environmentally friendly modes of transport like express pool, e-bikes and scooters, and emergent business like freight, and high potential markets in the Middle East and India, where we are cementing our leadership position, okay? So obviously Lyft has more impressive growth as far as growth rates right now. Obviously Uber is a much bigger company. Like, they're not even really on the same scale as far as overall size of the companies and size of their revenues. So how I see things a few ways. One, Lyft is totally the underdog in this situation. Okay, they're obviously the much smaller guy. Now, sometimes you can maybe bet on the smaller guy in a situation. Maybe they come out on top, and you can get a way bigger gain from something like that. But they definitely don't have the scale that Uber does. They're definitely the underdog in this fight. Okay. Number two, Uber is a big beast with many growth levers. So if you look at Uber's business model, it's not just they have the transportation business, right, the ride-sharing business, but also they're expanding into bikes and scooters, especially around big cities where people might not want to to take an Uber ride or a Lyft ride, or it might just be more convenient to hop on a scooter or something. I remember when we were on vacation in San Diego this summer, those scooters were everywhere in downtown San Diego. It was like, people were riding them around and just dropping them whatever, all over the place and whatnot. It's kind of a mess if you're a city and trying to deal with this. But as far as those businesses, they're definitely big growth businesses. Uber Eats is a massive platform they're expanding as far as food delivery goes. So if you're looking at Uber's business model, not only do they have a lot more market share than Lyft in the transportation side, the traditional side, but they also have so many growth levers they're pulling right now and going forward. So they're very much focused on growth, not just in transportation side of the business, but internationally and kind of in all these other adjacent businesses that they see fit, all right? Number 3 is transport prices war will end, in my opinion, over the next few years, and the transportation business for both of these companies will become an absolute cash cow. So as of right now, these companies have been in a price war. They've been trying to undercut each other for years and years and years, and it obviously produces huge losses. In my opinion, now that both these companies are expected to go public, the mentality is going to change there, okay? As in the public markets, the investor base, they like profitability, all right? They like to see a company get profitable and actually start making money. There are very few companies I can ever look at that were public companies and got away with taking big losses for a long period of time. Most companies that go public, the investor base wants to see them start making profits, or at least have one big business that's a cash cow that can fund other projects down the road. They like to see that, okay? So in my opinion, both these companies, as far as a price war, will end. They almost have monopoly type market shares now. They'll start raising prices for riders, and their businesses aren't likely to get hurt by that, and they'll end up starting to make profits from that, and they'll become like cash cow businesses for them that they can funnel that money into other things. That's just the way I see it. It's going to take a few years to get there, but as far as this whole price war trying to undercut each other, I think that's going to end, and they'll start going in the other direction. Number 4, Uber seems, and once again, we don't have the prospectuses yet for these companies, but Uber seems like the far safer investment with more upside, all right, despite being way bigger. So, sometimes you can say, well, if I bet on the smaller guy, maybe there's more upside there. In my personal opinion, once again, we don't have the prospectuses yet, but if I just look at all the data I'm giving, Uber looks like the far safer investment despite having a way bigger valuation. It honestly looks like it has more upside just because of how much this company is expanding internationally, how much of a growth mindset this company has, growing into other businesses and whatnot. So if I look at it in that respect, I look at Uber and I'm like, this looks more attractive. Now, both of these companies have equal amounts of risk involved with them. Let's go over some of the risks with these. Number 1 is that all IPOs are highly risky. I'm not a big fan of IPO investing. The big reason I'm not a big fan of it, right, is because you got to think about it this way. Imagine you own a business. You own a business and you're going to sell out some of your ownership to the public markets. Would you sell out some of that ownership at a fair price, at an undervalued price to the investors, or would you try to get top dollar for those? Obviously, anybody with a brain would try to get top dollar for their investment, okay? So most companies that go public, the investor base that's in it right now are going to try to get as much as possible for their investment that they're selling out of, their portion of their investment they're selling out of. So if I look at Uber and Lyft, these companies are probably going to be valued, very high, obviously expecting a lot of growth in the future, but they're not going to sell for cheap prices. That's just how it is. And this is why a lot of times an IPO can be hot for a little while, and then it just goes really far south, and next thing you know, an IPO falls 30, 40, 50, 60+%. Sometimes it's not even because the business went bad or something. A lot of times it's just because it was way overvalued, and investors in the public market start to look at this and like, wait, this company's way overvalued. I don't want to be invested in this. It starts getting a bad reputation. Investors start selling more, and then also on top of that, you start having early day employees who might have stock in the company start to sell out as their time periods start to go away. Like usually most people can't sell that are insiders of the company for at least the first 6 to 12 months. When those time periods start to go off, you see a lot of selling. And so IPOs, it's just not a big thing. I'm very interested. Sometimes you can trade them, but they're highly risky, guys. Highly, highly risky. Number 2, they may not make profits for years, all right? So that's the thing about this. One, maybe the price war never ends and they just keep trying to cut each other's head off and, they just can't make money from the transportation business. I think that's unrealistic. I think that business will end up making profits, but if you look at both these business models, Uber is probably going to still be expanding, and they might take losses for a long, long time to come, even if they make money on their transportation, the traditional transportation side of their business. Same thing with Lyft. I'm sure they're going to want to expand into other markets and whatnot. So if you're looking at both these business models, they might not actually make money for a long time to come, okay? They might be very unprofitable for a long time to come, and that's definitely a risk. Number 3, food delivery is highly competitive. So Uber Eats, they're trying to make a big name for themselves in food delivery, but there are so many players, some that are already in the public markets, and then just a lot of companies that compete in that space as it is. So Uber, they got a chance to maybe win it, maybe be the number 1 or number 2 player there as far as Uber Eats goes in the food delivery market. But man, that's a really, really competitive category. And if you're looking at that business model, all the companies there are just going to be fighting for market share for a while. So it's highly doubtful that that business will make any money as far as the bottom line for a long time to come. Number 4, the scooter and bike sharing business is unbelievably competitive because those are 2 huge markets that are exploding. Like I said, in big cities and whatnot, just businesses trying to put scooters in them and bike sharing and all that type of stuff, right? Because those are businesses that people are looking at and they're like, well, we could be the next Lyft, we could be the next Uber in this category, so let's compete there. So as Uber expands into those categories, those are highly competitive. Once again, those are probably businesses that aren't going to make any money, for maybe years and years into the future, if they ever make money, all right? And that's not the biggest risk of all. The biggest risk of all, number 5, is a company named Tesla. Now, Tesla's not going to be a major competitive threat for Uber and Lyft for at least probably 3 to 5 years down the road. It's not something that's hitting next year or not a competitive threat for 2020 or even 2021. This is a 2022 and past competitive threat in a massive, massive way for their traditional transportation side of their business. Here's what we have. Tesla has an unbelievable opportunity to be the first company in the entire world as far as having total self-driving vehicles that literally you don't even need to be like in the driver's seat to be driving, okay? Right now, Tesla's at the stage where the cars can pretty much drive themselves for the most part. You just kind of need to keep your eye on things. I know I have friends and whatnot that have Teslas and they just like sit there and do nothing. They kind of like pay attention to the road or maybe they're on their computer or phone or something, but the car pretty much does all the work. But you still need to be in the driver's seat for the car, okay? And especially to make certain decisions. Now, I believe that Tesla within the next 3 to 5 years, and Elon Musk is talking about maybe within a year or so, they'll actually have self-driving cars where it's massively more safe than a human driving that car. The decision making will be so much better with all the cameras and keeping an eye on everything, so much more aware than a human can be. So when I look at it, Tesla's going to be the first player to have real self-driving cars where you literally don't even have to be in the driver's seat to drive the thing. Like, it will do everything itself and you'll get there much safer than what a human can do, okay? So, being that they're going to have that, they're going to be in a position where they'll be able to undercut Uber and Lyft's pricing in a massive, massive way if they want to get into this business, which I believe they're going to get into this business, okay? Because they'll be able to build out their own fleet of owned cars for transportation. Because guess what? Tesla builds cars. They build cars. They'll be able to, sell them back to themselves or whatever for basically no margin because they don't care about that because they're going to make money on it on the transport side, okay? And also, they're going to have a ton of customers that have Model 3s and whatever other Teslas are out there at the time, Model Ys and Model Xs and whatever other, future Teslas. They have this massive customer fleet of cars that are going to be out there by that time. Maybe even millions of people in the United States of America alone that will own Teslas. And guess what? You'll be able to have your car go ahead and make you money while you're at home, okay? So if I think about my car right now, for 23 hours of the day, pretty much, it sits in the garage and does nothing. Imagine if your car, because it has full autonomy, self-driving, if your car can go into the network and actually make you money while you're just sitting at home or while you're sleeping at night or while you're watching TV or something like that. That's the future we're going to. So they're going to have a huge customer fleet of people's cars that people are like, oh, I would love my car to make me money right now. The car can go out and, go pick up passengers and take them wherever for the next 6 hours, and then I need my car back and plug it in, and that is that, okay? So if I'm looking at this, Tesla is a massive competitive threat starting in about 3 to 5 years from now. Uber and Lyft, one, they're not going to beat Tesla at full, self-driving cars. They're going to be way behind the ball as far as that goes. Their companies are going to be relying on another company. So Uber and Lyft, their hope and prayer is that some other company, either Google or somebody like that, can have cars that are full self-driving and can do it in a cost-effective manner. So they're like crossing their fingers, hoping that somebody else can have the technology, so then they can go ahead and incorporate it into their cars, right? And then their cars, because basically the driver takes up a lot of money. If you take the driver out of things, all of a sudden you're able to cut costs in a massive way, right? Because that driver is making $15 or $20 or maybe more than $20 per hour. If the car is driving itself, there's no driver to be paid, which means you can bring down price massively, which means these guys, their business models literally become pretty much irrelevant overnight, okay? So they're crossing their fingers hoping somebody else can do it, somebody else can figure it out, at least by the time Tesla figures it out, which I think is going to be a hard proposition. And then also, these companies aren't going to own their own fleet of cars. If they do, it's going to be extremely costly because let's imagine they want all Teslas for their fleet. Well, they're going to have to buy Teslas at a much more expensive price than what Tesla's going to be able to buy cars from themselves, because Tesla doesn't care about making margin to themselves. But if they sell cars over here to Uber and Lyft, they're going to want their 30% or 40% margins on that car, and it's a major cost disadvantage to these business models. So if I'm looking at their main business model as of right now, I think Tesla is a massive threat, and most people aren't even thinking about this yet because it's still like at least 3 to 5 years down the road. So most people aren't even thinking about this yet, but wait to see how all this plays out. It's not going to be good for these guys over here. So, I think that's a big competitive threat out there, and we'll see how all that shakes out over time, over the coming years. But needless to say, at least as of looking at it now, I wouldn't touch either of these companies. I don't invest in IPOs, but if I was forced to, from what I've seen across the board, I would probably pick Uber over Lyft if I was forced to actually invest in one of these companies. So anyways, I want to know your guys' opinion down there in that comment section. As always, I love hearing your guys' opinion. What would you invest in, Uber, Lyft? Neither one. I would love to hear from you guys. Thank you for watching and have a great day.